What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button if you haven't already, hit that subscribe and notification buttons as well. It really helps the channel grow, and we really appreciate those who continue to tune in. If you hit that subscribe and notification button, that way you are alerted to when we release new content. Aside from the nightly and weekend videos, we do release bonus content from time to time, so you want to make sure you're alerted to when we release those videos. Now, the nightly and weekend videos, like today's video, focus mostly on identifying triggers and targets from trades ranging from scalps and intraday trades all the way up to long-term swings or leap trades. So if you want a deeper dive into exactly how we set up our charts, the broadening formations, levels of support, resistance, things of that nature, make sure you check out the bonus content on our YouTube page, because we do have a couple of videos that dive deeper into that for you. Also, if you are not familiar with the STRAT, which is the base of our charting and trading method, make sure you check out the description of this video. There is a link to a free PDF quick reference guide for you. This guide gives you all the basics of the STRAT. It's a very simple strategy to learn. There's a numbering system of candles, just 1, 2, 3, and then if you bring in broadening formations, it's a very simple way to get a very detailed picture of price action. So make sure you check out the link in the description for that quick reference guide. So I do encourage you to stay with us through the full video. We do go over triggers and targets on shorter time frames, but we also go over those on higher time frames as well. So give some pretty good insight on all time frames. With that, let's go ahead and look at today's agenda. First, we will recap the price action from Friday, February 27th, before we zoom out and take a look at the week, month, quarter, and year's price action. There's a new, not only week coming up this coming week, but a new month. So we want to make sure we are have a good idea of where we're at from those higher time frames. Then we'll take a look at the market makers' expected move for the week of March 6th. Before we zoom back in and set our 4-hour markers and the triggers and targets for not only Monday, March 2nd and the week of March 6th, but again, it's a new month, so we want to look at the triggers and targets for the month as well. And we'll do a quick review of the triggers and targets for the quarter and year. All right. So let's go ahead and start out with the 5-minute chart, like we always do, to take a look at the past day's price action. We'd like to look at the 5-minute chart because it shows us how we can take advantage of the proven and repeatable strategy that we talked about for early morning scalps or early entries into longer day trades. And the method that we use is looking for higher lows at or above opening print to get into calls, or looking for lower highs at or below opening print to get into puts. If you're getting into calls, then overnight high and previous high a day are your targets. If you're getting into puts, then previous low a day and overnight low should be your targets as well. Again, those are the targets for that early move, or that scalp that you're looking for, that early entry into the longer day trade. So if it does reach either previous high a day or overnight high, if you're getting calls to the upside, then of course we can then move to the 4-hour targets and the 1-day targets. If we reach the those scalp targets with some momentum and some follow through, but at least for those early morning scalps and those early entries into those longer day trades, again, you want to look for higher lows at or above opening print to get into calls, or lower highs at or below opening print to get into puts. All right, so that's enough of that. So yesterday, or Friday, we had our open here at 61.50, basically right at overnight low, right? So we wanted to look for how that was going to be resolved. Yeah, it was a slight gap down, but just by cents. So we did open, had a quick flash to the downside, bounced off of this 50% full Fibonacci retracement level. Sorry, I don't know why I could think of retracement, but we hit this 50% retracement of the January high, and we bounced. Now, in comparison to the end of Friday's price action, this was a lower low, right? So once we got this lower high as well and pushed back down, that was the start of a downtrend. But you can see that there was this slight higher low, again at that 50% retracement level, and we did get a bounce, right? So this 2 up locked this 2 down in as a lower low. This 2 down locked this 2 up in as a lower high. So you would think we're about to go make a lower low and continue this move to the downside, but we bounced again off of this 50% retracement and got back above opening print level. The gap had been closed already, so don't really need to worry about that, but got back up over opening print and got this sideways action. We then got the 2 up and locked this 2 down in as a higher low, and that was our entry, right? The higher low at opening print to get into calls. So we did enter here. We took this up to the 61.8. Now, one thing that we do want to bring attention to is, the targets to the upside, right? Targets to the upside are overnight high and previous high a day. Well, look at where those are at. Overnight high was up here at $65, so essentially a $4 move, $65.50, so essentially a $4 move, and that's just the market maker's expected move high. That's not even the previous day's high. Previous day's high was all the way up here at 71. So the fact that we were in sideways action, downtrend essentially on the 1 hour, you got to think about, are we really going to hit those targets? And you got to kind of temper your expectations. So when we did, let's get this back to view so everybody can see it, especially if you're on phone. There we go. So when we did break above, we were looking for incremental levels to sell at, right? That first level was the 61.8 fib, right? We bounced off of the 50. So the next obvious move for that would be to get to the 61.8. So we did scale out of half of our position here at the 61.8. And we were just waiting to see, how that would resolve. It was basically right at the last week's 50% level. And, if you're familiar with this channel, we talk about this level a lot and what it means. So it had, at this point, had become resistance for us, and we hadn't even made it all the way there, right? We wicked through the 61.8, but couldn't even get there. So we did pull back. Now we did get a higher high, but again, it's right at the 61.8 fib. We're in a downtrend on the shorter time frames. Yesterday was a big down day as well, so we've got a lot of overhead supply. So it's you just had to be patient here. So we did get the push up, got the higher low, but then got a lower high, right? So consolidation. We didn't get stopped out because it never came down and made a lower low. But once we did finally establish this, kind of push back up to the 61.8 and get rejected again. Yes, this was a higher high in comparison to this high, but you can see this candle, or both candles really, just wicking above it and pulling back, closing below it. So at that point, we get this lower high, another higher low, but a lower high, so more consolidation, more patience, and then we finally get this lower high here and lower low, right? And that's where we got stopped out of that position, right? So decent profit for the first part of our position, not really a whole lot of profit for the second part of that position, but what that did give us is a nuanced trigger, right? So if you're familiar with this channel, you know that if we're around that opening print level, and if we've started to, the day has started, we're decently into the day, right? Like we're at 11 o'clock. So 2.5 hours into trading. At this point, we're not thinking so much about the opening print level in terms of higher highs and lower lows, because the scalp has already happened. We've got to start to kind of look at the higher time frames. So if we go out here to, actually, let me just take back to the big screen. So if we go to the 15, right, we pushed up, and this is essentially a lower, I'll make this bigger for everyone on phone. There we go. All right, so this was the high of Friday, and this is where we were starting to get those lower highs but higher lows, consolidation, and then finally this break below this this 2 up right here gives us the basically locks us in as a lower high, right? And that starts the descent back down. And if we look at internals, if we look at Friday, right, vol QD was negative all day, tick was negative all day, breadth was in trend lower zone. So it wouldn't take much for the bottom to fall out, and that's what we're recognizing, right? If you go back to the 5-minute, back at 11 o'clock, right, we're getting these lower highs, lower highs, lower highs. Yes, we're getting those higher lows for consolidation, but the highs never get higher, right? So you would hope that the consolidation breaks to a broadening formation at the very least, right? So from consolidated price action to wider price action swings. That way you have the chance to make more money on bigger moves, right? But the main thing was the highs were getting lower, internals were negative, right? There's no reason to believe that we're going to be pushing up at above last week's 50% level at the very least, right? There's no reason to make a higher high on the day, essentially is what I'm saying, right? So that was while these were getting these lower highs, and we're continuing to watch, the lows. We set our stops, and we're lining things up to get into puts because we want to take advantage of the price action to the downside, right? So essentially, we did get our lower low, broke for the lower high. Our entry was right around in here, and out there it was right here. Here's the lower high, the established lower high, right? Because we talk about threes and how to us, they're more of soft highs and soft lows. So we had the more established lower high here. We entered. It was at market makers expected move low, so we do know it was a little bit riskier of a play, just from the standpoint of 70% of the time the market makers are right, and the other 30% of the time, I would say, now this isn't backed up by any back testing or anything like that. I would say the remaining 30%, 10% of the time we go an extended amount past that market makers expectation, but that 20% of the time where we go out of the expected range, it's not by a whole lot, and you usually play around in that area. So we knew that there was a possibility that the bottom could drop out, but we have a lot of support here in market makers expected move low, previous low a day, opening print, overnight low, and then this 50% fib retracement of the pullback from January. So again, tempered expectations, but just continue to take the steps down. So we got this lower high, we entered here, pushed down, got the bounce off of opening print, previous low a day, overnight low, pushed back up, but got this lower high and continued that push down, right? And then once we came back up, got this soft lower high, and then basically a higher low, right? Here, this low was 61.08. This one was 61.10. So there's your higher low. And then as soon as we push back up above this, this two up, right? Because we consider this a soft high. Once we got above this two up, the high of this two down right here, that the lower low, that's when we went ahead and sold the position of puts. We actually just sold the full position, getting close to the end of the day. And if the bottom hasn't totally dropped out, then you run into that risk of having the end of day squeeze. For one, for two, we don't usually even trade this long into Fridays. So we were actually just ready to be done. Money was made. A lot more money was made during the week, but Fridays for us are really kind of wrap up days. And it was, I was kind of looking at myself like, why am I still trading at this time? But anyways, we did go ahead and exit the position here. So not a whole lot of profit, but we were able to profit on both sides of the equation. And then, of course, you get that end of the day squeeze on Friday. Zero DTEs are expiring. All the typical things that happen on a Friday afternoon. And you get that price pushed back to the upside. Let's see, it's closed at 62.77 so far in after hours, weekend. So the afters are closed until Sunday. We're down a little bit further at 62.22. So obviously a little bit of a pullback from that push at the end of the day, but that's how everything sorted out for the day. So hopefully that was understandable for those who are just getting familiar with this process. For those who are familiar with this channel, you're probably like, this is going too slow, but we want to make sure that everybody gets the information that they need. So that's how everything looked from a shorter time frame. We zoom out a little bit here. Let's get a cleaner chart. We zoom out a little bit here, and we can see we're just sideways, right? We've talked about this a lot. Top of the range is 70.71. Bottom of the range is 60.61. And that's exactly what happened. In 2 days, we went from 70 to 60, right? Boom, just like that. Stairs up, escalator, elevator down, right? The drops are usually faster than the pushes to the upside. You can see that big drop here. Decent sized drop here in comparison to this price action, right? Pretty fast drop there. fast drop there, So we got that fast drop, and back to the bottom of the range, and you can see where looks like we're trying to establish, are we going to break the bottom of this range, pull back, maybe make a lower high here for that further drop, or are we establishing kind of like a double bottom here at the bottom of the range, and are we going to go back up to the top? It remains to be seen. I'm trying to think, we have I think it's AVGO has earnings coming up this week, so that could be a catalyst for us, but there's not a whole lot of catalysts left in terms of like earnings. They keep making all these announcements of agreements to buy chips or whatever. So those can be catalysts through the week, but not a whole lot in terms of like earnings or big announcements that seem to be coming up, investor days or anything like that in the chip space. But we know chips stay active. It's a huge part of the ecosystem, the world these days, with how everybody is going in on AI. So it remains a good place to trade. And now we have the opportunity to identify, at least starting Monday, are we going to make some type of lower high here that's just going to drop us out of the range, or are we going to push back up, make some type of higher low here that's going to get us back up to the top of the range? So yet to be seen, but that's what we are looking at. It's totally neutral. From the higher time frame perspective, when you're looking at it, it's just sideways, right? But you do have these big swings. Now in terms of trend, the hour chart is in a downtrend, right? Here's this lower high, lower low. We'll see if this is going to be a lower high to give us a lower low, or if we're going to make a pushback to the upside of the range. But the 1 hour is in a downtrend. If we look at the 4 hour, it's essentially neutral, right? We went from higher high to lower low, so it made a broadening formation. Let's just make, where's my tools at? There we go. So yeah, low to low. Oops. Come on. Here we go. So we got this broadening formation that's essentially formed here. We haven't made this low, so we need to go 2 up in order to lock this in as a low to establish this being the bottom of the broadening formation. Otherwise, if we continue to push down on Monday and then maybe bounce on Tuesday, that broadening formation could be even wider, right? So on the day, on the 4 hour chart, no trend. 1 hour chart, downtrend. If we look at the day, no trend, right? The 4 hour in the day, no trend, right? Coming from a higher high, we made a low here that's lower than this low, lower than this low. And it's yet to remain to be seen whether this is going to be the low for that move, or if we're going to push down even further. We'll see coming up. But that's kind of where we're at. Up to the 1 day chart is neutral, slightly bearish leaning, but just volatile, right? Up and down, as opposed to the week and beyond. Oops, sorry about that. As opposed to the week and beyond, where we actually have trends. You can see where we're just sideways in this range, right? And we got to wait till we get to the edges and see what happens at those edges. So far, once we get to this bottom edge, we're bouncing back to the top, and once we get to the top, we're dropping back to the bottom. So just continue to play that. I know it can be harder for trend traders, but if you can be patient and wait for some type of move at those edges, it gives you a lot better chance. If we get that higher low here, then go ahead and get your calls. Look for the top of the range. But once we get to that top of the range, be ready to exit those and see things back down to the bottom of the range, either selling calls or buying puts. Right. That's enough there. Let's zoom out a little bit further. Start taking a look at things from a more zoomed out view. On the week, we talked about how we are in an uptrend. Right. A couple of weeks ago, we had this higher low. And then this week we made the higher high. So technically we are in an uptrend, but today was this week was a failed 2 up week. When we say failed 2 up, it's because it closed red. So we opened here, but we closed here. Yes, we pushed up, made that higher high, but we pulled all the way back enough to close back down here. Now, we still closed within the previous week's price action, but what that did do is set us up with a 1 failed 2 up and a very good possibility of a 1, 2 up, 2 down to be triggered in this coming week. The one thing that is positive about that particular strat reversal is the magnitude of that move is the low of the candle to the left of the 1. So this 2 up right here, this low is the magnitude. A lot of times that low is way further down here. So the fact that this inside candle low and the previous 2 up candle low are so close means that the magnitude of that move would technically only take us back, down here to this $59 level. But should we break below that $59 level, then it starts to look more like a 2 down combo 2 up. Like if you combine these 3 candles together, that's just 1 2 up candle in comparison to this 2 down. So if we go below this level, would then trigger this 2 down combo 2 up 2 down. So combo 2 up 2 down, and the magnitude of that move is the low of the 2 down, and that's all the way down here at $49, right? That brings us closer to this gap here at 48, and the gap here at 45. So if we're able to, if that strat triggers and only reaches the magnitude for that particular strat, the 1 2 up 2 down, we're in good shape. We will make a 2 down, but it would be a higher low, and you would hope to go back to the top of the range at least, if not further, and continue this uptrend, albeit flattening uptrend on the week chart, right? So nothing, yes, we had a red week, but it was a 2 up making a higher high. So, how bearish can you be about that week, right? Again, neutral, slightly bearish leaning at worst if we're looking at just individual candle. But if we're looking at the series, the trend, the series of candles creating the trend, then, technically we're still in an uptrend, right? Nothing is broken down from the week perspective, right? Now, in the month, we talked about the possibility this past month of the 1 2 up 2 down, and it didn't trigger. We threatened it. Let's make this bigger. Here we go. We threatened it kind of early on in the month, right, when we pushed down to towards the lows of January. But we're able to remain, in that upper 2/3 of the candle and make a 2 up, right? That was the worry, right? Are we gonna go 2 down for this 1 2 up 2 down, which that magnitude again 1 2 up 2 down. The magnitude is the low of the candle to the left of the 1. So this is what we were talking about earlier. The low of the candle to the left of the 1 is usually a lot lower, and that's what we've got on the month situation, right? So if this ends up being a 1 combo 2 up 2 down situation, right? If March we break below 45.08 down here, that would then trigger this 1 combo 2 up 2 down, and the magnitude of the move would be, again, the low of the 2 to the left of the 1, which is down here at the $28 level. And that just throws us into these gaps, right? We got that gap at 28.27. There's a gap at 22, and those could act as magnets to give us more momentum to the downside. Now, am I saying that's going to happen? No, I'm not saying that. But what I am saying is that it's a possibility, and that's what makes our system so effective, right? Is we don't predict, but what we do have is triggers and targets for both sides of the equation, and we just take what price action gives us, right? Staying fluid and just taking what price gives us. So if we do trigger that, that opens the door for a lot of money to the downside, either selling calls or buying puts, or however you want to do it, right? It gives you that a big magnitude, a big range that you can make some money to the downside. Now, you wouldn't want to get too far over your skis. Yes, the magnitude of that move would be down here, but we are technically in an uptrend. So how far back is it going to pull really? Right? Even if it does trigger, do we even make it to the low of the 1? And if we do we bounce off of that point? If we do, that gives us some type of higher low, and we're moving back to the upside, hopefully going to continue this uptrend. But technically we are in an uptrend, so how far are you going to pull back really? We'll see. Have to be some really negative catalysts to really bring us back down to these July levels, right? Back here, I guess August. Yeah, we hit it in July. So July, August, September, October, those levels around here. But yeah, again, it can definitely happen. The strat is there. We've seen crazier strat reversals in the past, so just keep an eye on that. Let's go back out to the quarter now, because again, there's not a whole lot to look for here. We had this one combo 2 down, combo 2 up that triggered. 70.08 was the magnitude. It reached that magnitude, and you see we're having this back and forth, this little bit of pullback. Earlier on in the week we were back up here. So after we've reached the strat on the quarter, it's reasonable to see some, especially from the higher time frame, a little bit of a pullback, and that's what we got on the year as well, right? The year started off with a last year was a 2 down, and we went 2 up early in January, giving us this 2 down, 2 up trigger, magnitude being that, again, that 70.08, and we reached magnitude and we were having that little bit of a pullback. So not a whole lot to say from the higher time frames, other than we've got to be patient. It's still bullish, right? Nothing's broken down, but we don't have any more triggers for any strat reversals to the upside. We just have continuations, meaning we've got to look into blue sky territory at some of these fib extensions, where these broadening formations are lining up, things of that nature, to get our targets on that higher time frame. But something will shake on the lower time frames on that day chart. We'll make a lower low and a lower high and a lower low, or a higher high and a higher low, to start a new trend, get us out of this sideways action. But for right now, on those higher time frames, nothing to be afraid of, nothing being broken down, right? Let's take a look at the market maker's expected move for this upcoming week. There we go. To do that, a couple of ways you can do that. We use Thinkorswim, usually for over a decade now. And the way that you can find that in Thinkorswim is you can go to the options chain for this coming week, March 6th. And if you go over here to the right, there's a plus or minus a number in parentheses, plus or minus, in this case, 8.855. That is the market maker's expected move. So they expect plus or minus $8.85. We'll call it $8.86 from the close price on Friday, right? So what that does is gives us a range. Let's go to our notes here. A range of 71.63 to 53.91. That is what the market makers expect price action to be within that range for this upcoming week. Again, we talked about 70% of the time this is right, but there is 30% of the time where we do go either above or below, or both in some cases, if it's a real volatile week. So just keep those as guides, right? They're not end all be all levels. That doesn't mean if we reach 71.63, price stops and moves sideways, or just automatically rejects and goes to the bottom of the range. No, you just have to assess price action at that point. It's just a point of inflection, and see where we go. The way that they calculate that is by taking the at the money straddle plus the at the money or in the money strangle and divide by 2. So 410 plus 430 plus 385 plus 445 and divided by 2. And you get this 8.855, right? So $8.86 expected move for this coming week. Yeah, pretty big, pretty decent size move. What am I trying to do here one day? Oops, come on, Thinkorswim. What did we have? High 72.36 to 63.76. Yeah, that's like $9, which is essentially what they're expecting for this week. So we'll see what happens, but that is the market maker's expected move. Let's go ahead and take a look at the charts here for Monday coming up, and the week ahead, and set our triggers and targets for these lower time frames, especially get things established for the for Monday itself, because things can obviously change throughout the week, and we don't like to make predictions, so we just take things a day at a time. And looking at this 4-hour time frame, again, we've got this sideways action. We've talked about, from a scalping or early entry into day trades perspective, we want to look for higher lows at or above opening print to get into calls, or lower highs at or below opening print to get into puts. But from the 4-hour, I'm on the day chart. Let's go to the 4-hour. From the 4-hour time frame, if we're looking at the STRAT perspective, again, we're at the bottom of the range. We've got this 2-1 two down, and then an inside candle from Monday, those 4-hour candles. But technically, because we had that one to close out Thursday's session, we are in a one combo two down situation. So that leaves on the board for Monday a one combo two down, two up. Now that's one of our favorite strats because that candle to the left of the one can be the extreme that is the magnitude can be a long ways away from that one, right? An inside candle can be very small compared to the candle that is to the left of it, and that's the case here, right? Because the one, two down, two up magnitude, that the target is not the high of the one, but just the high of the candle to the left of the one, right? And if you're not familiar with the strat, check the description of this video. There's a link to a free PDF quick reference guide that has these strat reversals in it. There's only, I don't know, like 9 major reversals that to keep track of, maybe 7 major reversals to keep track of. You know, you end up having your favorites, which I do 1 2 down 2 up, 1 2 up 2 down, or 3 2 down 2 up, or 3 2 up 2 down. Those are my favorites. But you know, get those locked down and in your brain because they happen all the time. But yeah, that would give us a move that would take us all the way back up to the $71 level. Now, do I think that would happen in one day? Not really. Again, it's elevator down, stairs up, so it's usually, you know, push up, sideways, up, sideways, up, sideways. It might take a couple of days to get all the way back up to 71, but that is the magnitude of the move, so it is a possibility it could happen. But you want to keep in mind where you're at, right? You've got levels of resistance above. You got previous high of day. You got the 200 fib of the April 7 bull flag. You've got the last week's 50% levels. The 67.39 has been a major point of resistance for the last couple months, really. And then you've got this daily downtrend line that you would have to fight through all before getting up to the top of that move, right? So keep that in mind if it does trigger, right? If we go 2 1 2 up reversal, right? Enter at the high of the 1. The exit would be the high of the 2, right? That's just for that particular strat, but that does put us into a combo strat. So if we get above the 63.76 level, again, that triggers us 1 combo 2 down, 2 up, and now we're looking at a magnitude all the way up here at 71, right? So upside, not saying we would get up there, but that would be the magnitude for that move. If we go to the downside, not a lot of magnitude in terms of this 2 1 2 down strat continuation. Just 3 candle strat, right? The entry would be at the low of the 1, exit would be at the low of the 2. But again, we would be at the bottom of the range there. You want to exercise some patience, kind of see what would happen at that point. At that point, it's just continuation strat. So there's entry, right? The low, previous low day, Friday's low, but there's no real exit, right? So you got to look out for things like this 4-hour broadening formation, last month's 50% level, that's February's, January's 50% level. I forgot to move the monthly, what are they called? Retracements. So that is still a point of inflection. So just, temper your expectations as how far we go down, because again, we are at the bottom of this range and we need some type of, even if we break below, we need some type of lower high below this level and continue to push down to really establish, okay, we are in a downtrend, right? Otherwise, it's a possibility that we're going back to the top of the range. If we take a look at things from the day chart, clean this up a little bit here. There we go, right? We've still got this sideways action. We're essentially at the bottom of the range here. Yes, we did go below here. That was turned into a look below and fail back into the range. So we'll have to see, is that same thing going to happen, right? If we do get the dropout, do we pop back up into range, or do we make that lower high and continue the downtrend, right? We made a lower low in comparison to these lows, but we're coming from a higher high. So there's no trend on the day, right? We've just got a broadening formation forming. So just keep that in mind. You could have, again, another day of two-sided action where you can make profits to the downside and to the upside. But yeah, that's where we stand from the day's perspective. Let's take a look at the week. Clean this up a little bit more there. There we go. Again, we talked about we made the higher high, but we failed 2 up. So just keep a lookout. If we go 2 down, that triggers this 1, 2 up, 2 down, but the magnitude is only to the low of the candle to the left of that 1. So that's not too far. And we've got a little bit of support of this, price inflection area, which was January's 50% level, right? So just because we're moved into March doesn't mean that area is not an area of inflection. Just keep that in mind. Let's go to the notes here, just because, I keep going to that. Go to the notes. We've been looking at the charts quite a bit. Let's look at the hard numbers, right? So for Monday, March 2nd, there will be 212 trading days left in the year. Close price on Friday was 62.77. We know that we've got full time frame continuity to the upside from the quarter and year perspective, right? Quarter and year are both green, but it is about to be a new week and a new month. So we are yet to see not only what the flip will be, but whether we're going to be start the month off and the week off green or red, right? So just keep that in mind. We've got to wait for those to be established to get our continuity factor down. The expected move for the week we talked about was $8.86, giving us expected move of 71.63 to 53.91. And we know that there are no gaps above, but we've got plenty of gaps below that we've got to keep an eye on. We talked about from a scalping perspective or an early entry into a day trade perspective, we want to look for higher lows at or above opening print to get into calls, or we want to look for lower highs at or below opening print to get into puts. On the 4-hour time frame, we talked about if we go to the downside, that does trigger this 2 down, triggering at 61.08 and only a magnitude of 60.66. So not a magnitude there, but we do have some extended targets out there for you if we do reach that 60.66 with some momentum. To the upside, we talked about how the initial STRAT trigger would be a 2 up at 62.90, magnitude of 63.76. So not a whole lot of magnitude there, but just under a dollar. But if we do get to that 63.76 and start going above it, that triggers that 1 combo 2 down, combo 2 up, magnitude again all the way up here at 70.11. And so since we are in the face of a neutral trend from a day perspective and more of a neutral trend from a 4-hour perspective, we've got to lower, I don't want to say lower, but temper our expectations a bit as to how far we go in just one day, right? So if we don't make it all the way up to that 71.11, we see these levels right here as points of inflection where we could either hit and reject and pull back, or just move sideways at that level, right? Now from the day perspective, we talked about if we go to the downside, it's just a 2 down continuation, triggering at 60.66. No magnitude for that move because it's a continuation, not a reversal. So we have our extended targets out here for you. And then to the upside, that we would trigger a 2 down, 2 up at 63.76. Again, magnitude quite high there, up at 71.11. So we do have these intermediate targets on the way up there to that magnitude of 71.11. Right. On the week, right, we've got a new week. So if we go to the downside, that would trigger a 1 failed 2 up, 2 down at 60.66. Magnitude, again, not that far at 59.29, but that would trigger this combo 2 up, 2 down. And the magnitude of that is 49.33. So we do want to keep an eye out that we don't get too far below that 59.29 level. We do have these intermediate targets on the way to the magnitude of 49. But if the rug really gets pulled, forget these intermediate targets. 49.39 will probably be the place that we either stop or bounce. In case we go lower, we do have the extended targets out here for you, but we're looking for 49.33 as probably the end move if that does get triggered. All right. Now to the upside, we would just have this failed 2 up continuation at 72.36 triggering before we've got the extended target of 73.15. 74.21 is the all-time high. Then we've got a couple of more extended targets listed out here for you. On the month, if we go 2 up, 2 down, that triggers at 49.33. Excuse me. So we would have to trigger this 1 2 up 2 down, combo 2 up 2 down on the week before we would ever reach this 49.33. But keep it in mind because it could happen. If we do reach that 49.33, that gives us a 2 up 2 down, triggering at 49.33, but the magnitude only being 45.08. So not that large of a move in terms of the month. Now we will have made a large move to get to that point, so just keep that in mind and know that we may not go too much further than 45.08. But if we do go below 45.08, that does trigger technically a 1 combo 2 up, combo 2 down. Magnitude being all the way down here at 28.12, right? So that would be a huge move to make in a month. Not saying that it won't happen or that it couldn't happen. It definitely could, but not something we expect to happen. So even if we do get down to this 49.33 and reach magnitude there and then still trigger this 1 combo 2 up, combo 2 down, we've got things like 44.15, which is a gap close as an intermediate target, and a couple of other intermediate targets as we make our way down to that level, just because that is such a huge move. Now, if we go to the upside, we get this 2 up continuation, again, it's triggering at 72.36. And, of course, all-time high would be the first target, but from a monthly perspective, if we're going to make a bigger move, these are going to be our extended targets. All right. We talked about on the quarter, we already triggered and ran the strat for the 1 combo 2 down, combo 2 up, as well as on the year, we triggered and ran the full strat for the year, which is the 2 down, 2 up. So not a whole lot else to look for in terms of, the strat reversal or magnitude to reach. We've just got our extended targets out here that we're trying to hit, right? Blue sky territory and all-time high, all right? So that's what we have for today's video. Those are your triggers and targets for everything from a scalping perspective all the way up through the 1-year chart. We hope that everybody enjoyed this video. It was a little bit longer. Well, I guess I did ramble on a little bit, but hopefully we put in as much information as we could without taking up too much of your time. So if you did enjoy this video and you've made it this far, go ahead and throw a thumbs up on the video. We would really appreciate it. It really helps the channel grow. We've got a free channel. We don't have any memberships or anything like that. We're just trying to spread try to spread information to as many people as possible, try and help make their trading journey an easier journey, right? Because trading will never just be totally easy, but the easier you can make it for yourself, the better. So that's what we're trying to do, just spread some information, help make people's lives easier in terms of trading, and just build a community of like-minded folks here. So again, this strategy doesn't work just for SOXL. This works for any publicly traded company in the U.S. stock market. So take it and run with it and use it for other tickers, because we definitely do. But yeah, that's what we have for today's video. We'll go ahead and wrap it up here like we always do. If you're watching this Saturday or Sunday, hope you get some good rest Sunday night, wake up Monday morning refreshed and ready for some trading. If you're watching this Monday morning or Monday during the day, we hope you had a great weekend and had some good rest on Sunday night, and we look forward to getting out there and trading with you.